Last time I talked, we discussed projections for 2012 here in Denver, and what I want to talk about right now is the notion of rental rates and what is a market rate. And in our opinion, market rates in reports are great to compare periods of time, but they're really not so great in terms of comparing a particular company's lease. What is a market rate? What does that really mean to you? In our opinion, the real estate market is really imperfect, and so it's very difficult to say that the average rate for space, for example, downtown is $28 a square foot. Does that mean that if you did less than that, you did really well, or if you paid more than that, that you didn't do well? And the thought I'd like to throw out there is that since real estate is an imperfect market, it's very difficult to quantify that. There are so many factors that go into how a landlord would price their space, and from a big picture perspective, some of those might be when the building was purchased, how much it was bought for, how much debt is actually on the property, when does the debt expire, what other pressures is the landlord feeling within their portfolio that might dictate them to be more competitive on a particular space. How much money has already been embedded in a space in tenant improvements, and how much additional capital is the landlord going to be forced to contribute. The last one that is especially noteworthy in this time frame is the pressure that landlords are having in selling assets. And so if a building is being marketed for sale, there could be more or less pressure on rental rates to help them achieve that sale.